Welcome to GAYA Podcast.
Assalamualaikum warahmatullahi wabarakatuh. Hello guys, welcome to GAYA Podcast. Okay, how are you guys? I hope you are will doing better and have a great day. And then, okay, today I will not alone because I will be accompanied by our speaker is the Giffari. Say hello, Giffari. Okay, hi Giffari. Okay. Okay, Giffari will accompany me to discuss about the topic. Maybe you will be curious about the topic. Okay, for the topic, before I continue discuss with the topic, our topic, I will explain before our overview about our topic. Maybe as you know, income or revenue, sometimes it will be sensitive to talk about that. So, what is revenue? Based on PSAK 23, revenue is an increase in economic benefit during a certain accounting period in the form of the income or addition to asset or decrease in liabilities that cause an increased equity, which doesn't come from investor contribution. Okay, maybe it's an overview about our topic is revenue or income. For the continue about the discussion, I will talk with the Giffari. For the topic is recognition, revenue, and then what is tax object in income. Okay, Giffari. So, what are the tax provision for recognizing income?
Okay, I will try to answer your question with the tax provision for recognizing income. Income tax provisions that is tax imposed on income achieved and earned by the taxpayers. And the tax law state that there are two methods of tax recognizing. The first one is cash basis and also accrual basis. Do you know what the difference about cash basis and also accrual basis?
Actually, I don't know what the cash basis and accrual basis. So if can you explain for me about that?
Okay, I will try to explain. The first one is cash basis. It's a method of recognizing in accounting which only record transaction if there is cash receipt or payment. So even there are transactions that occur, for example, like they are achievable, but because there is no cash coming in or going out, this transaction is not recorded using the cash basis method. And for example, if you receive income from another company but you receive the money later, the transaction will not be recorded due to this no cash comes in and this is not considered income. And the next is accrual method is an accounting record technique where the recording is made when a transaction occurs even though cash has not been received. And recording using the accrual basis will certainly be more accurate. And by using the accrual basis asset, liabilities and equity are cash to measure. In the accrual basis, revenue will be recognized when the company has the right to collect the result of transaction, and using the accrual basis doesn't care about when cash will be received and when cash will be used.
Okay, so can we use both method for the tax?
Okay, actually yes we can. If our company record using the accrual basis method, we can calculate tax directly. The accrual basis method is easier to use. Well, the cash basis method can also be used, must be modified in the following way. And the step 1, visual calculation of total sales in period must include all sales, both cash and non-cash. And also the next is expenditure to acquire the depreciation and also amortization, like must be capitalized and deducted. And the last we use of total cash must be issued of the annual.
Okay, Giffari, is every income we receive or earn as a tax object?
Not all income that we receive or earn is tax objects. Even though there are additional capabilities achieved or obtained by taxpayer, not all income transactions are even tax object, or not all revenue transactions are often tax object.
So what are the objects of the income tax?
Okay, based on law number 56 2008, there are several categories that include tax objects. The first one is salaries, and then next is wax, commission, honorarium, bonus, pension, and also rewards. And the next is price from reference or awards, and then is operating profits, and then is profit from sale or transfer of asset, and then is purchase of tax payment, charge, SP, and additional payment, and then is interest, dividend, royalty, and rent, and also the next is profit due to their life, and also different from asset evaluation, also on the tax object. Okay, maybe for complete information you can see on the tax regulation that I said before. And also in this regulation also talk about the non-tax objects. The include in the regulation is inheritance, grant, and assistance that have nothing to do with the taxpayer works, and then is asset achieved by the company, dividend achieved by company in the country, cooperatives that our companies, and also the insurance company payment to private individual, and also distribution of profit after tax. And from the complete information you can see directly in the tax regulation in 36, Article 36 2008.
Okay, as Giffari explained, we can know about the recognized revenue and tax object revenue, what the method, and then what is the object of the income tax. Okay, maybe for discussion about the topic revenue, for the recognized revenue and tax object, we will continue with another topic with another speaker, and then before that I will say thank you for Giffari as a speaker to have a great explanation and thoroughly explanation about the recognized revenue and tax object revenue. Okay, Giffari, thank you for your coming in our podcast.
Okay, you're welcome. Hello guys.
Hello guys, welcome back again to GAYA podcast. Okay, before we discuss about the revenue with the Giffari, and then we can next to discuss again with the topic is the revenue more detail with the Andre. Andre will be say hi for the audience. Okay, hi Andre. Okay, today we will discussion about the revenue more detail. Maybe we will continue about the discussion with Giffari before. Okay, Andre, I will know about the disposing fixed asset or revenue for the income in our own tax, and then for the oversized company branch. Okay, so what are the benefits of disposing of fixed asset?
Well, gains or losses arising from the correction of fixed assets are determined as the differences between the net disposal process. Well, if any, and their carrying amount and are included in profit or loss, but are not classified as in income one. And in the tax context, gains or losses arising from the recognition fixed assets will be included in profits and loss and subject to income tax.
Actually, I don't get it about your explanation. Can you explain again?
Well, maybe I will try to answer by simple statement, right? So, as we know that the old tax provision, as stated in Article number 11 of Laws number 7, year 1983 states only withdrawals or disposal of fixed assets in the building category and extraordinary withdrawal, such as due to natural disaster, withdrawal that caused the announcement of most of the company's activities, or withdrawal beyond the company's capabilities. And it can result in profits or losses calculated in the year of withdrawal. Well, for example, a building with a book value of 1.5 billion sold for 0.5 billion will provide a profit or taxable of 0.5 billion. On the other hand, selling a diesel engine with a book value of 200 million rupiah for 300 million rupiah will reduce the book value of an asset of that type by that amount. In the case of the sale of diesel engine, for tax purposes with no profit are subject to tax. However, based on the law number 10 of 1994 concerning amendment to law number 7 of 1983 as amended by law number 7 of 1991. The treatment is different to it, so it no longer exists. Almost the same as accounting, all the withdrawal or disposal of asset will result in profit or losses, and calculation of profits is also applied to property exchange transaction, even if no payment occurs. Likewise with the exchange of asset, even if the assets are the same or similar, and they are still in the same group. Well, as we know that asset donated, given or assisted to religious, educational, social organization, and small business, including cooperative, will be calculated as profit for the giver.
Wow, great explanation, Andre. Well, about the revenue or income, how to determine income in your own case?
Well, for the purpose of determining taxable income, for a group of taxpayer, the amount of income can be determined directly, outside of bookkeeping, for example, by attribution, imputation, allocation, or applying norms for calculating net income. And indirect determination is intended for simplicity and ease of administration, providing certainty to taxpayers, and closing to possibility of tax avoidance techniques.
Why? What about the determining income from overseas company branch that are permanent, established, or we can call in Indonesia is BUT?
Well, BUT, permanent established. As we know that income from overseas company branches, maybe it's permanent established, they are determined based on attribution according to fact and force of attraction. Activities actually carried out by permanent established head office. For example, a branch of an overseas company, according to its books, earned an operating profit of 100 million rupiah, and it was then discovered that the head office was selling the same product as the branch in Indonesia and earned a profit of 200 million rupiah. For tax purposes, in accordance with provisions of Article 5 of Income Tax Law. There is one thing more.
What's that?
It's about geographical coverage of income. I will explain. Income tax on wajib pajak dalam negeri is imposed on income tax. The income tax law adheres to a global taxation system. It's called worldwide income tax system, full tax liability, universal or global system. On wajib pajak dalam negeri and a territorial system, maybe like limited taxability. On global wajib pajak luar negeri, which is received or obtained by taxpayers from both Indonesian and outside Indonesian. Therefore, income from bench, representative or agent activities representative abroad must be consolidated with income received or derived from Indonesia. And depending on the category of overseas, overseas income received or obtained by the taxpayer, and income consolidation can be carried out on an equal basis or equal basis. And according to the explanation of Article 4, number 1 of Income Tax Law, it deviates from the principal global taxation and accounting practices. Exception to the consolidation of equal apply to foreign losses.
I see. Okay, actually, we can know about the more explanation about the revenue, like what is the benefit of disposing of fixed asset. We can know about the determined income in our own takes, and then we can know what the determining income from overseas company that are permanent, established, or BUT. Okay, well, I think for the discussion about the more detailed revenue about with the Andre is selesai.
Nggak apa-apa. Soalnya I think maybe it's finished or
I think maybe it's finished with discussion revenue with the Andre. I think thank you, Andre, for your explanation with the great explanation and then more detailed explanation about the revenue. Maybe we will. Okay, maybe we will back again with the last speaker. Our last speaker is Ayu, and then for the next material we'll discuss again with the last speaker. Okay, thank you guys for the hear about the more detail with the speaker is Andre. Okay, bye. Okay guys, welcome back again to GAYA podcast. Okay, after we discuss about the revenue with the Giffari and then this section we will discuss about revenue again with the Montel with the another subject or sub-subject for the revenue with the Ayu. Ayu can say hi for the audience.
Hello guys.
Okay, hi Ayu. Okay. For the topic about the revenue, we will discuss more detail with you. Where the sub-subject for the revenue with is the income from intercompany transaction. How do the intercompany transaction affect the financial statement, and then sales recognition, and then recognition income from interest or commission. So, Ayu, what does it mean by income from the intercompany transaction?
Okay, Yasmin, actually, income from intercompany transaction is income originating from transaction or business activities that occur between two companies that have a special relationship, such as companies that are the same corporate group or the closely relationship related from the companies from the significant influence or direct control over. And usually, by ownership, the majority of shares are with the ownership structure that super control. And also, intercompany transaction can include first type, such as include the sale of the product or goods of the profession or the services, and the transfer assets such as property or technology, and also the licensure of the patent or trademark and many other from the transaction. And from the transaction, we can occur for the variety of the reason, such as include the operational effectively, tax management, or the operational coordination within the corporate group.
Okay, Ayu. So, how do the intercompany transaction will be affect to the financial statement?
Okay, in the financial statement, in the intercompany transaction, it will be record related revenue, cost, profit, or loss. And the revenue from such as transaction will increase net income, with the cost will be with the reduce from the cost. And this is create the direct impact on the company net profit, cost associated with the reduce, and this will be affect in net profit.
Okay, and then why is a sales recognition on the for VAT important in the accounting?
Okay. In the accounting, actually has the three main effects. The first one is it will be help a company comply with the tax regulation, and this is to ensure that company collect PPN from the customer in the accordance with the applicable in law. And the second one, it will maintain consistent financial reporting. From the meantime, the separating PPN from revenue, financial reporting becomes more transparent and consistent, making financial analysis easier. And the last one, it will avoid tax dispute. In the tax, it will be following the correct recognition procedure, and the companies can avoid legal problem and tax the dispute. That's it.
Okay, so how do the financial companies recognize income from interest or the commission?
Okay, in the commission or the interest, it will take companies such as bank or securities companies, right? And in the recognized income from the interest or the commission, it will the company will receive the commission when the accordance with the agreement with customer or the transaction correct with its type of company, and they can have different revenue to recognition from the they use its method, and depend on the type of the business, it will be the affected by the product or the services and other the concept. And from the revenue, it will recognition key to prepare financial report that are accurate and in accordance with the applicable to accounting standard or the accounting standard.
That's okay. I get the point about your explanation. Maybe the audience can get some more explanation and or income from your explanation. Okay. Ayu have done to be complete the discussion about the revenue or after the discussion with the Giffari and Andre discussion before, and then for the Ayu, thanks a lot for your explanation, and then maybe we can close this discussion about the revenue topic with the revenue. Maybe we can close. Thank you for your watching, and I'm sorry if the mistake. Okay, assalamualaikum warahmatullahi wabarakatuh. Bye guys.